that I can relate to each of you. A quick background regarding my previous work experience. I started my career with Big 5 accounting firm called Arthur Andersen. Then with Ernst & Young, and then with KPMG. I was with KPMG until April. I decided to leave KPMG because of one of the key players in this ecosystem, namely Mogmi. When I was in October something, I was thinking of whether to quit stock, not to quit. I was in Sony and we were all sitting together. So taking that into account, I said, okay, fine, I think it's the best time to jump on. And I felt that it's never the wrong time to do the right thing. If you feel that it's time to jump, then you might as well jump. So I decided, okay, fine, so I might as well quit and start something of my own. Balu, as well. Balu, why did you say? The hands are looking at Balu, the chartered accountant as well, he was working with me in KPMG. Balu specializes on accounting and tax. Jose, just stand up. Jose is an advocate by profession. He specializes largely on indirect tax. Now, in terms of my specialization, Vakil, I have to specialize on law. I largely focus on corporate law. I'm not yet getting into family law. Kerala divorce case, this is one of my targets in life. Apart from that, I also specialize in tax. So I'm a faculty with all the 3 institutes. I like dancing, I like acting, and I like a few other things which are common in Sanjay and other therapy outside from this discussion. So that's about it. I think the objective of the session was principally to sort of highlight what are the key aspects as a startup that you should consider. I know KPMG came to give me a presentation on the tax side, but I will try and relate it quite practically. Okay? A lot of my illustrations, since I mentioned Mogmi, all situations that I mentioned, rather that we mentioned in our discussion, are purely fictional. Any semblance or resemblance to a person dead or alive is purely coincidental. So, for example, if I tell you an illustration, I might possibly say Mogmi is Rashmanathan. It's just purely coincidental. You know? So, nowhere am I relating it to their scheme of things. But nevertheless, since I've worked extensively with Mogmi, I thought, having seen Sanjay, Sony, and Vig, and the way that they have grown, the typical mistakes that a startup has. Okay? So, we want to sort of share from our experiences what are the mistakes that they have made, such that you don't make the same mistakes. It is simple without quoting a reference to anyone. This was for another startup as well. There was a small service tax issue that came. Just general service tax issue. The issue was, all these are tax penalty proceedings on it. The inspector, service tax inspector comes to the door and says, penalty of penalty like twice the amount of the tax ought to be paid. For more tax money, you have to pay 200 rupees of penalty. So, 200, as long as I can save on 200, so what is my normal tendency? Somebody comes and scares you, you have to pay 200 rupees penalty. As an adult in India, what is your first reaction? Police will jump. So I faced a startup where a startup had this very same issue. This adjustment got them into further problem. The inspector was handling their file for transfer. Avadi caution paid fully out of the school to not because he wanted to scoot from that place. But just so happened that situation so came that he moved from let's say one particular section to the other section. So he was not the one who was handling the file. So net at the end of it, caution was he said a penalty proceeding. So I'm a guy. Don't get me wrong. While it is obviously it's wrong to pay speed money as we call it in our parlance. I think a lot of these problems of paying speed money or paying let's say can be avoided if we get things right at the first instance itself. Although the mistakes that people make is you realize that you made a number of mistakes. So in this session, the way we split the session is we'll talk on the income tax side, then we'll get into the indirect tax side. Then, as a concluding remark, we'll share with you a lot of illustrations as we sort of go along, right? And towards the end of the session, we'll talk of the typical mistakes that a startup has. To make the session even more better, I would like if you all can also share if you all can sort of echo your respective views. Let's try and make it as interactive as possible. So that it will be a much more fun, much more participative session. So we start with Balu. So Balu will come in, start out on the income tax side. Joseph will speak on the indirect tax side. Then we'll talk about the labor law compliances as well. We'll focus on that. Then lastly, we'll spend, let's say, half an hour or so pure getting to typical startup issues. Then if you all have faced the issues, please mention it this side. So I'll be able to relate it to it and we can sort of see what comment we're on. A few questions. How many of you all have started a company? How many of you all have started a firm or without any presence? Company. How many companies in this particular thing? 11 companies. Company पढ़ाना है ना सोचना तो the best part about Malayali is the first thing he thinks of is liability. Liability is all that. Who are the partnership firms and the other things? Limited liability partnership firms. Limited liability partnership firms. 3 partnership firms, right? You have the right partners. One more partnership firm. You would come I would number partnership firm. The 3 of us are a partnership firm. Liability nothing much against that. I would personally recommend starting with a partnership firm, then graduating to a company. I'll tell you why. The kind of compliances, that you guys are exposed to is important. When you start your business, like for example, we got a few people working under us. Whenever we go to a client, the client expects either the 3 of us to be present or 1 of us to be present. If assuming you recruit a person, you can't expect that person to go meet a client. These people are there, paid with wow makers. I'm going to show you wow makers. Like wow makers, we will pay with let's pour at names. We had in fact introduced him to one of our clients. One of our clients invited to sort of meet up with that person, see what you can do. I think it's wow makers. That's Mindelics. Also Mindelics. One of the startups that we tried to quite a few, where I introduced him with one particular client, and this guy went and met up with a client. The next time I think he asked someone else to go meet up with him. That got the client irritated. And how could you send someone else? So my point is, when you start your business, especially in your initial phase, a large part of your focus goes into developing your business. Then you don't care a tiny rat's ass with respect to what are the compliance that have to be done. You have to file your annual return, you have to have board meetings. These are things that you actually don't want to spend your time pondering about. Just want to focus on your business, see that it grows, then move on to the next level. For which reason, I am of the personal view that you graduate slowly. You move from a partnership firm, then you look at a limited liability partnership, and then move to a company. My reasons are strong. For example, in a partnership firm, I might decide to have my accounts, I might not decide to have my accounts. That's my prerogative. As a partnership firm, just to tell each of you here, there are options by which now income tax actually or income tax liability comes to where you put the tax surcharge, there's a surcharge which is there, there's a cess which is there. Let's say 33-34% partnership firm I am, there are options by which you can reduce your tax liability to as low as 4%. So it means instead of paying, let's put 30%, you'll end up paying 4%. So your savings is how much? 26%. 26% for a startup is a lot. So when I pay salaries in a month, I realize the kind of pinches I feel. The moment I press, I go to my HDFC site and press salary once. You start with a bank, finally you pay salary, you land up with a small petty balance at the end of it. These are the kind of pressure that The worst of all is there's a stupid law called service tax. Last you don't know what money do I have balance for myself? No. I'm telling you, this is the standard ground that I have argued with them. Buildings and collection service tax for them. So, I mean, that's the scheme of life we are exposed to. So any place where you can save on tax, vertical and where you can save on tax, I think you should evaluate it. So start from a company, start from a firm, then graduate to a limited liability partnership. I'm not sure if somebody mentioned to you, it combines the feature of a partnership firm and of a company. So the fear that you had with respect to your limitation of your liability or a partnership firm, you get that now, LLP structure. Principally, the rate of tax for an LLP and a company, and LLP is far more tax efficient when compared to a company. Okay. For example, in an LLP, when you have a partnership with LLP, if assuming you decide to sell off your stake, when a company has a share of it, let's say I buy a share of Bombay, okay, now popular share is 50 point again 40 I have to pay taxes of 23%, 20% surcharge is 23%. But a partnership firm, when I exit, I can structure the exit such that I don't have to pay any tax. How is it relevant for you all? You have started now, I'm sure all of you have plans for funding. You have started now, you say, okay, fine, so I'm going to look at funding. Funding again, I'm obviously going to dilute a part of my stake. I'm sure all of you all are in that scheme of thing. When you decide to dilute, and a partnership firm or an LLP structure gives you the flexibility of diluting virtually tax-free. However, the company kind of setup, if assume you decide to dilute, you will have to pay capital gains tax. So there are the options of structuring your transactions far more limited. For which reason, I am a strong believer saying that you start with a company as you're approaching a stage for funding, you slowly migrate to an LLP and then have the capital infused, dilute a part of your stake and move to a company. Because you can structure the entire transaction such that you exit in a manner such that you don't even pay a single penny of tax. So to cut the long story short, one, you're looking at a 4% tax vis-a-vis a 30%, so you'll end up with a 26% saving on your regular stream of income. At the point of exit, instead of paying 22% tax, you'll end up paying 0% tax. So with this broad outline, we'll get into the presentation. So please share your views as well. We'll make it extremely interactive as we sort of go along.
Okay, thanks, Shri. So just to come back to our presentation as such, I'm audible enough, right? I don't see the need for this. So just to come back to our presentation as such, as we have put it at the first slide, how to understand, that's one part of it. But the most important part of it comes in the next stage, and act on taxation related matters. Because as a startup, I know what are the issues that I'm facing. Because I'm here to advise you all on, say, what can be done on TDS compliances, how can you account for the same. But now, if you guys come back to my firm and ask me, show me your account books, I don't have anything to show you. So as startups, we are all keen on advising others, but on implementing those things for our own business, we generally lack everything. So if you come back and ask me as GMA as a firm, are we compliant on TDS? Zero. Are we compliant on services? Service tax? Yes. We are compliant on service tax. Close is there, so we are compliant. Are we compliant on accounts? I don't have a tally system in place. So I don't know where my bills are, I don't know where my vouchers are. I am a startup. That's the normal excuse that I have to give you. So that's the first stage. And in India, the beauty of the system is that for each stage, you'll have some government angle there. Do you want to incorporate a company? Very good. Pay fees to the ROC, pay stamp duty. After incorporating the company, what do you do? Sir, I want to sustain, so I will manufacture something or I'll provide some services. Very good. Start paying excise duty, start paying service tax. Now for undertaking manufacture, for undertaking service, I need employees, sir. So I need to hire employees. Very good. Deduct TDS, pay professional tax. Okay. And then how do you sustain? I want to sell my goods, sir. Fine. Pay back, pay service tax again. You can do whatever you want, claim credit. What is credit? I don't know. But somehow ultimately you will end up getting something. And then okay, fine. At the end of the day, what do you end up earning? I earn profits from this, pay income tax. So that's the beauty of the system, because the beauty of the system here is that for each stage, we know the loopholes here. So the government is really good at finding loopholes. And then when you find that people here have actually started going into the loopholes of tax, they bring in amendments with retrospective effect. So we are all lucky that we are startups. Okay. So I don't want to be in a situation wherein I had started my company in 99-2000s, and in 2008-9, Mr. Pranab or Mr. Chidambaram brings in an amendment which states, this is to clarify that as far as Income Tax Act is concerned, our intention was always to tax software income from 1976 onwards. Okay, I'm not joking. This is the amendment that has come in the recent budget. If you look at the recent budget, starting from the Vodafone ruling to deduction of TDS on software payments, etc., they brought an amendment stating this was what the Act has stated. From 1976 onwards, this was what our intention was. Now come on here, you can't come back in 2009 and tell me from 99-2000 onwards, this is what I should have started doing. So in a country like India, where compliances matter the most, and then change in compliance is like changing your t-shirts every day. Okay. Today if I go there, if I look at my site, there would have been a notification that has come in as far as service tax is concerned. Tomorrow if I go there, income tax will come in criticizing the notification and then adding something more to it. And then I end up lost. It's like me, an accountant or a legal expert, coming back and asking you, what is the software changes that has happened? If Microsoft today tells me that Windows 7 is outdated, use Windows something else, say Windows 9 has come in, tomorrow Windows 10 comes in, you need to implement it. I don't know, because I'm not the expert in that. There's someone else who are experts in that field who have to guide me as far as the entire operation is concerned. That is where we lack. But as startups, our intention today, see, with the limited time span that we have of 2 hours, is to make you aware of certain issues that as a startup that you are bound to face. Okay? And certain issues that you're likely to miss out on. Because being startups, we also have constraints as far as our resources are concerned. So if you look at accounts, taxation matters, etc., most of you might be founders, most of you might be engaged in the actual operation of the company, and getting time to spare for all these activities becomes very difficult. Which is why we thought we focus on certain areas, okay, certain areas wherein we feel that there are exposures, and we also highlight certain practical situations wherein, okay, while coming to that situation, you need to understand, okay, fine, I need to be aware of this. Let me at least keep this in mind. And at the end of the presentation, you'll always be forwarding that, and then you can always come back with your doubts on it. And please feel free to do this. Feel free to ask your questions, okay? Because I'm not an empty statement. I am here to create an award movie, okay, out of this entire thing. So when I speak, I also want all the interaction from your side also. I don't want to wait for a question answer session where you come back and ask me, okay, fine, this is what I've noted down. While I'm speaking, please feel free to interact, and I'll also be interacting with you. Okay. At the end of the day, let's make this as interactive as possible. Let's forget the radio mango effect, when in a radio you can only listen to what the other person has to say. You can't revert back. Sometimes you feel like reverting back, but you can't do that. Okay. So let's avoid all those situations here. Let's make this as lively as possible. And then with this, I'll move on to my first slide on various tax compliances and stuff. Okay. Before that, there might be certain repetitions from the first session. So I've just spoken to 2 or 3 people here before starting off with this session here to understand on what were the topics discussed as far as the first session was concerned. So I have a general idea on what was discussed there. So I'll try and avoid repetitions, because that's the major intention, to guide you through the entire flow process in a matter of 2 hours. Okay. So I think Sherry would have given, Sherry has given a brilliant introduction speech, and then as far as all these entities are concerned, I'm sure that the first session would have covered your proprietorship, partnership firm, company, and we have also covered on the advantages of a limited liability partnership. Now just a couple of points here. Now what is the advantage of setting up a company or setting up a limited liability partnership? So most of you came back with a view. So what was your view? Why did you want to set up a company? You wanted to set up a company because your liability was limited, right? Looking down, looking up, give me the answer. Okay, fine. Can you just speak up? Yes? Okay, great. So your liability was limited, right? That's your entire intention. I don't want someone to come back after me tomorrow. I have a wife and a kid to look after. Okay, let it go after my company, but not after me. So that's the intention, right? Now, if you look at a limited liability partnership, the advantage of a limited liability partnership is that it combines the advantages of both the partnership and a company together, which is why people also prefer going in for a limited liability partnership. And as far as limited liability partnership is concerned, as the name itself suggests, the liability is limited, like in the case of a company. What is the advantage that you have? Your taxation rate is also lower. In the case of a company, your taxation rate is 30% plus 5% surcharge plus 3% education cess, which gives you a total net rate of 32.445% in tax. In LLP, the tax rate is as low as 30.9%. You save around 2%. But that's not the only advantage that an LLP offers. The time taken for registration of an LLP, low when compared to a company. The compliances that an LLP has to undertake, very much low when compared to a company. Company, you need to undertake board minutes. You need to undertake at least one board meeting in a quarter. You need to have annual general meetings. All these compliances are there as far as a company is concerned. But moving on to a limited liability partnership, these compliances become restricted. Now, how do you set up a limited liability partnership? Okay, there's a site www.llp.gov.in, okay, where you go and apply for the process of starting off with an LLP. And what is the requirement? There's only one basic requirement for starting off with an LLP. There should be at least 2 partners. And I would rename that as 2 designated partners. Okay, not directors as such, but 2 designated partners who would actually be involved in the actual affairs of the LLP as such. So this is the only requirement that you have, and I'm sure that all you groups here would satisfy this requirement. You would have at least 2 designated partners who would be able to assume the role as far as an LLP is concerned. Okay, so partnership firm is one option that you have because of the tax saving of 4% that we are talking about. We don't want to go into that in detail, but please understand that as a partnership firm, you are open to a situation where your taxes can be reduced to as low as 4%. And in LLP, your problem of limited liability gets solved, your taxation rate is lower, and your compliance cost, which is most important as far as I am concerned, comes to a lower extent because of the various benefits involved as far as an LLP is concerned. Okay. And various tax benefits, I don't want to go into too much detail into various tax benefits. For example, as Joe rightly pointed out, dividend distribution tax on your dividends. Is it applicable to an LLP? No. Now, there are loans and advances. If given between companies, there can be situations where a loan and advance is treated as income in the hands of the other company. I'm not going into too much of detail into all those terms right now, but I just want you to understand as a starter that there are various other options that are available for you as far as your growth stage is concerned.
One quick point just to take from one, like for example, you all started a company. Okay. Now you all say, I know the point that assume your profits was 100. Okay. You pay tax of 30. Let's assume that the tax rate, like Balu mentioned earlier, the tax rate for an LLP is lower than compared to a company. For just to make my math simple, let's make it in the case of an LLP, it's let's say 100 minus 30. Okay, so you'll end up with 70. On this 70, you have to pay dividend distribution tax in the case of a company.
So I think we can use a board that we have a mark. See, we just outline on what is the benefit that you have as far as an LLP is concerned. Where you see that there is a saving of at least 26% on your net.
So I just move on. So I just basically through illustration try and prove that the LLP is better. Now you might have questions saying, can I convert my company to an LLP? Is that a question that is there? Okay. So please ask. No. So I'll tell you when I deal with startup companies, the first question that they come back and ask is, company startup you can convert this company to an LLP, and the conversion can be done tax free. Okay. So you can look at an option where which you can simply convert your existing company to an LLP. I would personally advocate that. So I put one from okay, if you are getting sprain your neck, don't blame it. This side is a company. This side is an LLP. Profits.
Can you compare that partnership also along with this?
Okay, I'll get to that. So let's do this. I'll put a partnership also. LLP and partnership are more or less the same, except that you can structure your business such that you pay 4% tax. which you can't do in an LLP situation. Okay, so for example, in their case, could be because of their product. I really don't know. Could be because of the product. That, for example, in my case, for example, in my letter of engagement, I very clearly say that my maximum liability is limited to my fees. There's no, for example, my advice that I give will not result in my company going bust. Hopefully not. So, I don't face that those kind of extreme, but basically an LLP and a partner are more or less the same, except that here I can look at reducing it down to as low as 4%. But principally it's just the same. So I just avoid this section for the present. Okay. I look at profits of 100 minus your tax. Your tax rate in the case of a company, Banu mentioned 32.4451. I'll put it as 33.
Sherry is very good with mathematics.
Okay. In the case of an LLP, it comes to 30. Okay. 30 plus 30.
31.
30.9.
31. Okay, this will come down to 67. This will come down to 69. We can tell you maths. I don't think it will. 71. Now, in the case of a company, now here your remaining items, E70 can go back directly to each of the partners tax free. Now E70, for example, let's assume the pay and the partners. Kamal. Nickel. Can go back, let's assume our 50-50 article. They will get 35. They will get 35. This 35 and this 35 is tax free in their hands. So we'll carry on with this story now. On the 67, you have to pay something on the dividend distribution tax. Currently it's 18.5%, effective from next year it will go up to 20%. So 20% plus surcharge. So if you just think more, I make 20 just to make my math simple. I'll make it 20%. So this comes to 13. I'll make this 13. This comes to 54. Minus. So you land up with 54. Now under the Companies Act, assume you decide to declare dividends, you are required to transfer 10% of your profits to a reserve. Okay. So let's make on this 5.4, 10%. Okay, and then make 5 and land up with 49. Bottom line, on this 49, let's say I split it by 2, we land up with 24.5, 35. So basically,
Sorry, I didn't get that.
sorry, here this is what we call as transfer to reserve. Under the Companies Act, when you declare dividends, the Companies Act mandates you to transfer up to a maximum 10% of your profits to your reserve. Those means of this 54, I will transfer 10% to my reserve. So it's 5.4, I just made it 5. So bottom line will end up with 49. 49 vis-a-vis 70. So very clearly, for example, there is no, we don't need to spoke brain to finally realize at the end of the day that an LLP is a better structure when compared to that of a company. Okay, so for example, I would suggest, you can talk to your respective consultant as well, you should look at converting down to an LLP. So you are there any disadvantages in an LLP compared to it? That's a good question. John, have got any bank funding and any loans that you've taken from a bank? No. Okay.
That's actually one of the points I wanted to raise. We are in discussion with ICICI and their banking solutions, they would definitely want to consider a company because kind of purpose they can offer to only a company is pretty much.
Okay. See, I tell you what, that's my biggest flaw. I'm not sure if you read Reliance right now. Okay, an LLP is a super structure. And to give you an example, okay, now these are like tax advisors that you should like ponder over. Reliance at this stage has got 122 LLPs in this country. Okay, so for example, let's say Mukesh Ambani, he has a trust. Okay, the trust has invested into various LLPs. Okay, these LLPs in turn have invested into various companies. Okay, so that's how the usual structure of investment happens. When he decides to exit, he exits in a manner that does not pay any taxes. Okay. In fact, to be honest with you, the fight that happened between Mukesh and Amit